There are a lot of factors that can contribute to your new business chances of success, but none are so important as financial management. You may have decided to open a restaurant because you can cook, or a photography studio because you're great behind the camera. But starting a business won't automatically turn you into an accountant. Here are 5 tips in managing small business finances. Number 1. Budgeting is your best friend. The most important part of any financial plan is a budget. But how do you budget when you have no clue what's going to come in? One of the easiest places to start is to minimize your personal expenses as much as you can. A budget shouldn't be considered a plan for where to spend every dollar. Rather, the framework to help you make rational decisions about how your money is going to be spent. Create categories that include housing costs, transportation, groceries, memberships, and entertainment, and then come up with ways to reduce costs in each category as much as possible. Number 2. Maintain an emergency fund. What do you do if, or more likely when, your business goes through a slow period and you can't turn a profit? Or if your worst nightmare comes true and your business isn't successful? These are scary thoughts, but the reality is they're very common scenarios for a lot of small business owners who can't ensure a steady or consistent income. An emergency fund can help you get yourself out of a tough situation. Once you figure out how much money you'll need to cover your business and personal expenses for 1 month, multiply that by 6 and make sure you always have that much in your emergency fund. Number 3. Hire professionals when you need them. Chances are, if you're reading this list, you're probably not an accountant. While it's common for entrepreneurs to try to handle everything on their own, especially when trying to minimize costs, attempting to manage your own books or file your own taxes could actually end up costing you far more in the end. Spending money on a professional will often help you save money and will always help you save the headache. Accountants will not only find you more deductions and tax savings, but will also ensure you remain penalty-free and don't get yourself into trouble inadvertently. Number 4. Set money aside for taxes. Getting your ducks in a row for tax season can be challenging, frustrating, and a few other adjectives we'd rather not to spell out. Something as minor as a lost bill or receipt can have a damaging effect on your tax filing process and may even get you into big trouble. Nobody likes paying taxes, but the reality is none of us can avoid it. The government isn't forgiving. When you owe, and you don't want to be blindsided by an expense you didn't expect or see coming. Your rates will be different depending on your location, but the general rule of thumb is to set aside at least 35% of your income taxes. Number 5. Make sure you're getting paid. There's nothing that feels as good as knowing you've made a client happy with your services, except of course, knowing that they paid their invoice for said services on time. When you're running your own business, client payments are your lifeline. If your invoices don't get paid, your bills don't get paid, and if your bills don't get paid, your business can't run. One of the most important things you can do is have a clear and defined payment policy in place. Your clients should know what payments are due, when they're due, how they can be paid, and what happens if payments are late or missed. There you have it. We hope you enjoyed this video. And if you did, make sure to subscribe and watch for more of our videos. Thanks for watching.